Hi, I'm Tamika Tilleman, the Chief Policy Officer of Han Ventures, a firm focused on building a better internet. I want to start today by sharing two stories about how the international community responded to two similar complex emergencies. Earlier in my career, I worked as an advisor to two secretaries of state and a former senator you may have heard of named Joe Biden. It was in the course of that work that I ended up on a plane with the now President of the United States on our way to the country of Georgia during 2008, at a moment when the capital city Tbilisi was ringed with Russian tanks during an invasion of that country. On our flight home, after meeting with Georgian leaders, we started putting together plans for a large assistance package to help Georgians rebuild and recover from the war. However, as we worked with diplomats and development practitioners to determine how we were going to get resources to those in need, it quickly became clear that we would face some formidable challenges. As many of you know, moving development resources into complex environments is very risky, expensive, and slow. In the past, many donors, including the United States, have resorted to shipping pallets filled with $100 bills to try and work around this problem. In time, we were able to get resources into Georgia, but it took much longer than we would have hoped, and in many complex emergencies, the outcomes are far worse. And we see high levels of malfeasance, fraud, and abuse in responding to these crises. Fast forward 14 years to the Russian invasion of Ukraine. In the immediate aftermath of the invasion, the government needed help, and they issued a global appeal for digital assets. Rather than waiting weeks or months for bureaucracies to find ways to move assets in response, in a matter of days, $150 million had been mobilized using digital assets from all over the world. This was made possible using a technology called Web3. It provided not only a means of getting the resources to the Ukrainians quickly, but also a mechanism to ensure that those providing those resources could track them and have transparency into how they were being used. The internet is entering a third era of innovation. Web 1, which began in the 1990s, involved open, dynamic protocols such as email and web pages, and it enabled people for the first time to access information on the internet. But it was very hard to build sustainable business models around Web 1. Web 2, which began in the mid-2000s, took a different approach. We saw the dawn of the commercial internet with large centralized platforms aggregating enormous amounts of personal information and building advertising-based models that were wildly profitable for a handful of people, but created huge challenges for society and democracy. Web 3 is different. It's based on decentralized technologies that enable communities to own digital platforms, to participate in the governance of digital platforms, and to share in the upside when platforms succeed. Web 2 has been great for a handful of individuals in big tech and authoritarian governments, but it's not worked out well for everyone else. Web 3 provides an opportunity to build a new generation of digital tools that will help societies utilize innovation in a manner that is consistent with our values. Web 3 platforms are not only community-owned and community-governed, but they give individuals greater control over their data. When designed right, they'll share the financial upside of network effects far more equitably across a community of users. And this is not just a community as a generic term. Healthy, vibrant, dynamic communities are the cornerstone of value creation in Web 2. And they will enable us to unlock and build digital systems that serve people far more effectively than we've been able to in the past. We're seeing some of these systems start to come online in different forms around the world, and the results are incredibly exciting. As countries around the world start building the next generation of digital infrastructure, the upside is proving to be extraordinary. Kenya lifted 2% of their population out of poverty by virtue of adopting digital payments. Bangladesh eliminated 2 billion days of previously wasted time. And Estonia, the country with arguably the world's most advanced digital infrastructure, saves the equivalent of 2% of GDP each year. Project those numbers out across countries around the world, and it's clear we are looking at an extraordinary opportunity, potentially a golden era in digital development. Getting this right isn't only crucial for development, though. It's also critical to our democracy. In 1993, one of the world's great sociologists, Robert Putnam, published Making Democracy Work: Civic Traditions in Modern Italy, which sounds like an unusual book to bring into a conversation about technology. But he asked a very important question. Why is it that Northern Italy has historically had very highly functional institutions and a great deal of citizen participation, and Southern Italy has suffered from a deficit of trust and had far less economic development? Putnam asked the question why, and he traced the history of these two regions back 1,000 years. Beginning around 1000 AD, northern and central Italy had far more active civil society, with many citizens taking part in politics and social gatherings. Citizens came together and worked through peaceful means to address challenges of mutual concern, and this led to a dynamic in which they had far more trust in their institutions and each other. Politics evolved to be less hierarchical and more horizontal. Northern and central Italy created healthy democratic systems for their citizens. Southern Italy was very, very different. Governing structures in these areas were created largely by outside mercenaries and were far more feudal in nature. Peasants were controlled by knights, and knights were controlled by lords. Peasants would go out into the field every day, create value, and send most of that value up to manor houses. In exchange, they were allowed to access some basic necessities needed to sustain life and receive basic protection. But they had no expectation of private property, no expectation that they would be the primary beneficiaries of the value they created, and very little trust in the systems that supported their societies because they were not designed to work for them. Putnam found that the differences in medieval governing structures caused stark differences in the current political and economic environment in northern and southern Italy. This becomes incredibly important to us right now because the Web 2 world that we are inhabiting is, for practical purposes, a feudal system. Every morning we wake up, take out the modern equivalent of farming implements in the forms of our cell phones, and go to work cultivating a digital landscape that we do not own and will never control. The value of what we create in the form of data and information is sent up to digital manor houses. It's created a system that works well for the handful of feudal lords that sit in Silicon Valley and Seattle, but does not work well for the rest of us. Not coincidentally, as we have seen these systems take root around the world, levels of trust in institutions have plummeted and are now at historic lows. Realizing the full potential of Web3 technologies will require us to break out of our current era of digital feudalism and build systems capable of replenishing the reservoir of trust that irrigates everything we do. I would suggest to you that just as the end of the feudal system in the past led to a new renaissance, we may be witnessing the earliest moments of a renaissance today. New approaches to data and community ownership enabled by Web3, coupled with the ability to give individuals greater control over their data, and a new willingness on the part of governments in the United States and around the world to build a better decentralized internet, are unlocking extraordinary possibilities for the future of development. Better systems don't build themselves. They are created and forged through the work of individuals like all of you participating in this conversation. In years to come, we'll have the opportunity to decide how we want to use these digital tools. Will we strengthen our democracy, expand opportunity, and rebuild our broken institutions? Or will we go down a different path? If we hope to realize the potential of this new renaissance, we will need to design digital systems that enable a more humane fellowship with humankind. and establish vibrant communities as the cornerstones of value creation in the digital world. As we work to do that, we can replenish the reservoir of trust that irrigates human endeavor. That is the opportunity we need to embrace today. That is the cause that should unite us, and it is the obligation we must honor if we hope to build an internet that future generations will admire. I look forward to working with you in that effort and to the rest of our program today as we expand our understanding of these issues. Thank you.
Morning, everyone. This is Paul Nelson, Senior Advisor with USAID. I'm really excited to have this panel talking about Web3 and whether it's a useful tool or a hopeless distraction for the development and humanitarian assistance community. I'm joined by four wonderful panelists, Robbie Greenfield, who's the CEO and co-founder of Emerging Impact, Shailee Adinolfi, who's Director, Strategic Sales and Accounts with Consensus, Hilary Allen, who's a professor of law with American University, and Stephen Diehl, who's a noted technologist and also has background in finance. So everyone, thank you all for joining us. We just heard a keynote from Tamika Tillman painting a very compelling picture using the reference point of Italy and the Renaissance. And with this panel, I'm hoping to examine whether it is a Renaissance that we are looking forward to, or potentially a different era that some folks might have in mind, maybe a Middle Ages or medieval era instead. He extolled the potential benefits of Web3. Those benefits may certainly come about, but does the evidence back up the claims that are being made? What might complicate or hinder progress using Web3 enabled services toward outcomes that we all care about, like economic mobility, political agency, and empowerment? Many communities where USAID works have long grappled with low trust in government, with corruption, financial exclusion, and inequality of opportunity. And hard experience, as all the people listening to these sessions will tell you, hard experience shows that there are no shortcuts to these problems. Invariably, they are based on complex systemic factors. Yet Web3's pitch for decentralization seems like a very compelling way to potentially establish or repair a sense of agency, whether it's over your economic livelihood or your online identity, especially when people definitely don't feel often that they have a sense of control. So during the session, we'll hopefully unpack with more clarity the implications, the trade-offs, the ethics, thinking about all the development practitioners that are on the line, and the opportunities. So as I mentioned, my panelists have backgrounds in entrepreneurship, international development, tech, and finance. Also, just a notable backdrop for this session. In March 2022, the White House released an executive order on ensuring responsible development of digital assets. And of course, that outlines priorities such as protecting consumers, maintaining financial stability, and promoting responsible innovation. So for the panel, I'm hoping that this will be kind of a friendly point-counterpoint discussion. And I thought one way to start would just be to give a couple of, or each of you, an opportunity to react to what you just heard. So I'll first start with Robbie. Could you give a one-word reaction? And then after that one-word reaction to what Tamika said, could you talk about whether you agree with the way that he framed the problems?
I would say iteration. Iteration would be my one word. You know, for context, and I know, you know, colleagues, you know, on the panel, you know, have gone through this as well, is that I think the first thing, you know, that everyone kind of tries to figure out is, can, you know, Web3 technology accomplish simple tasks, particularly in the development context? So, you know, the simplest thing that you can do is make it accessible. You know, can people who need it most actually access it in a way that doesn't require them to have anything that they wouldn't otherwise have? So we're talking feature phones, you know, likely, and obviously, you know, intermittent, you know, connection to internet access and data. But then beyond that, once you can at least facilitate payments between, you know, two individuals or multiple individuals, and in a way that's accessible in terms of the devices or the resources that they have, you start to iterate through, more complex solutions like those that offer access to digital aid or microfinancial services that are based off of Web3 technologies. And that's where hopefully we don't see as many missteps as we're starting to see on the protocol side when we see major, exploits, losing tens, if not hundreds of millions of dollars because the context is, a lot more sensitive and can't adapt, to such losses. But at the same time, it would be helpful to actually see how can we leverage things like decentralized lending, for example, in a context in which people are actually using those loans for pragmatic reasons rather than yield farming. The same thing for safe savings, leveraging stable coins in a way in which they can off-ramp to, mobile money substitutes like M-Pesa, Airtel, et cetera. And I think as we gradually pilot, iterate, and expand those approaches, we can both, one, responsibly, give access and exposure to those that need it most, but then two, start to really see the landscape of what we consider both the social sector, but also just development aid in general change from a lot of facilitating agencies like USAID, but also many major NGOs, go from facilitating, one-off programs in regions to ones that have secondary effects long after the program has officially closed. And I know obviously, those organizations have been in transition in terms of doing that for some time now.
Thanks. I think you might have flouted my one-word rule there, but I appreciate the comment. Stephen, could I hand it over to you to one-word reaction? And in this case, rather than discuss whether you agree with the problems outlined, how do you feel about the solutions proposed?
One-word answer, I would probably say, I think it's kind of opposite. That would be my one word. And I would say, if I could address like why I think what he presented would be what I consider the kind of venture capitalist perspective, in which basically all problems of social development are cast in terms of technology. And I think the Web3 narrative that he presents is a very kind of rosy picture about a kind of techno-solutionist world in which many of the problems around aid and foreign development can be recast as technology problems. And I think, at least in my profession, Web3 itself is not a very well-defined term. I think it's become very much synonymous with the cryptocurrency movement. And within that cryptocurrency movement, I see kind of the exact opposite of the world that he presents. I see a world in which cryptocurrency creates the very conditions of serfdom and scarcity, because inherently it's based on cryptocurrencies are deflationary, speculative assets. And so I take a great deal of issue with the fact that that we would export these, what I consider rarely high-risk products to developing economies as a means of financial inclusion. I think what's often needed as far as like fintech is often technology that operates within the native domestic currency of the country, and not these kind of hyper-volatile speculative assets. And I'm deeply concerned about the fact that moving these kind of products abroad could have extreme consequences for people who already lack basic financial services. And so I'm deeply concerned about the worldview that he presents.
Great, thanks, Stephen. Shailee, over to you. One word, and then I'll this time I'll give you the option to either discuss whether you share with the way that the problems have been framed, or respond to whether you think the solutions are a good fit.
Yeah, I would say my one word is decentralization. And I think the Web3 movement is about decentralization of power and bringing power back to individuals and communities. And not all cryptocurrencies are speculative. I mean, I think Stephen makes a good point. But you have stable coins providing people 7 to 9% in returns, whereas savings on your USD is not providing that kind of return. So there are cryptocurrencies that are not stable coins that are still not as volatile as other cryptocurrencies. And so I would just say the Web3 space is moving very quickly, but there's still a lot to build and learn and secure. And so I would say to all those skeptics that are out there, just watch this space, be a part of it, test it. It's good to remain skeptical, and I do think we need to think now about inclusion, about the different types of power dynamics that could be created if we don't stick to the true values and some of the ideals that this movement started with in the first place.
Thanks, Shailee. Professor Hilary Allen, you're up. One-word reaction, and then how on the solution side, how well do you think what he envisions with Web3 is a fit for the problems of emergent authoritarianism, big tech platforms, et cetera?
Well, I'm going to come out and say cynical is my one word. Look, it's a nice story. The critique of Web 2 is entirely valid. Web 3 is not a response to that critique. This idea of democratization, decentralization, it is not playing out in the crypto ecosystem. And as Stephen already mentioned, sort of Web 3 is essentially a rebrand of crypto. What we see in crypto is vast inequality between the people who have the most concentrated holdings and then the small fish. What we see is the people who are the small fish don't really have much of a say. And think about it. If you have a share in Meta now, you are not dictating how the business is run. So what makes you think that having sort of one governance token in the Web3 ecosystem is going to give you any realistic chance of governing how this runs? And so the reason why I say cynical is I don't think the venture capitalists would be involved in this if there weren't a way to profit from it. And the profit is going to come from new intermediaries evolving. And as I said, the current crypto system that we have is rife with all kinds of new intermediaries. And you often don't even know who they are. So there's a lot of risk involved, and democratization, I think, is really just, it's a cynical marketing strategy.
So I'd like to shift, thanks, Hilary. I'd like to shift to a couple of concrete use cases. So looking to, I think, Robbie, I'll start with you. Could you share one or two concrete use cases that might be of relevance to environments where development practitioners on the line or communities that we engage with face on a day-to-day basis, and touch on how Web3 or particular Web3 applications deliver some tangible value? And then I have a follow-up question for you and Shailee after that.
Yeah, no, absolutely. And I think there is a bit of a dichotomy in terms of the level of decentralization Web3 can bring, but then also the level of operationalization that it can bring to existing solutions that don't necessarily need to be completely decentralized. So what I mean by that, and getting into the use cases, we've facilitated, Emerging Impact has facilitated humanitarian aid programs that have 100% transactional transparency with organizations like Hope for Haiti, with Care International in Ecuador, and also with Polish Humanitarian Action, in context in which you oftentimes might have fraud committed either by aid beneficiaries or the staff facilitating the program, where you can have 2-month transaction settlement times because the program is using paper vouchers, which is incredibly difficult from a tax perspective and also from an AML perspective in terms of making sure that those funds are being used for the proper purposes. And also, of course, you don't have any follow-on opportunities to protect the community that's receiving the aid to be more resilient in the future due to the current nature of most cash assistance programs. And effectively, in these programs, we use both digital wallets that were compatible with feature phones and USSD, or with WhatsApp, or even in communities that didn't have any phones at all, we use NFC cards, much like our debit or credit cards, so that they could not only receive those funds, but also transact via touch to pay or via sales codes with merchants that had applications that presented themselves as a simple point of sale, even though blockchain was on the back end to facilitate transactions for both services and products, while also giving the facilitating NGO, complete transparency as to how those funds are being used in a, conditional program. And we're starting to, yeah.
Sorry to interject briefly, Robbie. Are these using cryptocurrencies or crypto assets, or are these private permissioned blockchains?
Yeah, these are, no, this is all on public blockchains. So the first I actually did at Consensus with Oxfam International in Vanuatu that was using Diehl. Obviously, we made the transition later to USDC and to Celo Dollar on the Celo blockchain. Transaction throughput was high enough for these transactions to take place. We also showed the local currency instead of the underlying stablecoin. So these are design practices that are important to make sure that when you're facilitating, introducing these technologies to under-resourced communities, that you're not showing them crypto ticker symbols or things that would require a lot more technical literacy than necessary for them to get the value that they need, which is being able to exchange that money for a good or service on the ground based off of the needs analysis that the NGOs facilitated before those programs. And so that's, one example, that's actually working.
Thanks. So just following up on that for you, Shailee, so that's one example. So as many know, the impetus for looking at this or other programming or other interventions that the development community might support is often a disaster, or often the infrastructure failing or not existing in the community where we might be working. Those also often are environments where there's weak governance, where there's no regulatory safeguards that might normally apply to financial services. So this leads to the question of what are the preconditions that you think are necessary for people to safely interact with a technology or a service akin to what Robert was just outlining?
Yeah, I think so. The preconditions, I think we need to have obviously like all the basic infrastructure there for people to access like devices that are working and for the solutions to actually work, right? But the other thing is, I think the preconditions are community and trust within communities, and if you have the devices and the core infrastructure there to support you, then I think in a place, if you like we're seeing happen with decentralized autonomous organizations, it's early days, but when you have strong communities that where you have some guidelines in place to not allow for too much concentration of power in the hands of like a few or just one individual, you have communities working together to solve problems via these large protocols and DAOs. And I do think it takes time, it takes an understanding, but that the preconditions are just, trust, communities, individuals that want to make a difference and use the technology, and then let it see what happens, right? See what they do with it. It's still early. I don't think we have all the answers yet. It's still early. Ethereum is new. I can't say that the whole decentralized finance space started with Bitcoin, and we've been, yes, it did start around then, but like there's so much to work on still.
So it sounds like the evidence gathering is still necessary. Was someone going to chime in there? Was that you, Hilary? Okay, sorry, I thought I heard you. So I was actually going to shift to you, Hilary, because hearing this as one option. So using a crypto-based means in this particular case to facilitate payments or delivery of cash transfers, or even potentially as a momentary store of value for people in those environments. You mentioned earlier that Web3 is not necessarily the solution that it purports to be for the problems Tamika outlined. So in your mind, what are other approaches to shaping a more stable or inclusive financial system or broader digital economy? There's kind of this interesting nexus between finance and technology, and you have technologists that are kind of entering into the world of finance, and you have financiers entering into the world of technology, creating kind of sometimes an odd mix of terminology. So if Web3 isn't necessarily the best way in your mind to address inequality or poor governance, what should folks be paying more attention to?
Well, thank you for that question. And maybe it sort of helps for me to start by explaining what I'm actually a professor of, which is I study financial stability regulation, which means I really focus on what makes financial systems fragile. And in many ways, the number one answer is complexity. Now, some complexity can't be avoided, but additional complexity that's unneeded, that serves no purpose, is something that really threatens the stability of a financial system. And so I'm not against technology, but I think there are lots of interesting technologies to explore, but technologies that are unnecessarily complex and redundant, which is how I feel that most of the blockchain works, is rarely going to be the appropriate solution. So what people are looking for are things like real-time payments. I mean, that's the thing, that what people need are simple services. They don't need a runnable stable coin that works on a distributed ledger that is managed by, a consensus system, right? That's more complex than what people actually need. People need the simplest solutions possible. So instead of starting with the tech and trying to retrofit Web3 or crypto solutions to fit the problem, let's start with the problems themselves. Let's talk to the people on the ground and say, what do you actually need? And then come up with the technology that is the simplest, straightest line in order to satisfy those needs. That is the approach we should be taking, instead of having this Web3 and saying, well, we're sure we can make it do something someday. Let's try and do that. Why don't we just start with the problem and develop the simplest possible technological solution to fix it?
Thanks. And actually, that's a good segue to a question I had for you, Robbie, regarding alternatives. So there's been a lot of progress globally on real-time instant payments systems, so at a retail payments level. Earlier in Tamika's comments, he alluded to the development impact of M-Pesa in Kenya over the last 15 years. And also he spoke about a lot of the gains of using digital tools in Bangladesh also. But notably, both of those two examples were not actually Web3. Those are traditional regulated financial institutions that are non-bank providers in many cases. So in a world where real-time instant payments are becoming more and more prevalent in developing country contexts, does that and likewise, marketplace lending platforms are becoming more and more common as a means to address the small business finance gap, which is also often talked about in the DeFi space. In that world, does that undermine the value or the rationale or utility for the Web3 alternatives?
Yeah, no, it's a great question. And I agree with Hilary that any solution in the developmental context needs to start with the community that's being affected, right? That otherwise you're not able to design around the problems that they have. I would say that in the context of instant payments from non-Web3 technologies, such as traditional payment technologies like M-Pesa, Airtel, MTN, et cetera, there are two major issues, particularly in the context of cash assistance if we map to that use case. The first is that those companies do not share transactional data, even if you're using them in the humanitarian aid context, meaning that it is a lot easier to commit fraud using M-Pesa in a digital cash assistance program than would otherwise be possible if all transactions were at least auditable on a public ledger. We've seen this happen multiple times, not only across sub-Saharan Africa in terms of those programs, but also in the Asia Pacific as well. And typically there are clauses in which those companies will not, quite literally refuse to provide secondary transactions after disbursement with regards to providing that level of transparency. The second thing that we're starting to see are the transaction fees that these organizations levy across very vulnerable communities that use them. So M-Pesa in particular, and I love M-Pesa, but they are a purveyor of this, levy very high transaction fees. It's an average of 45 cents per transaction across all the countries that they operate in. And in fact, in Tanzania, not only is there an M-Pesa transaction fee, but there's also a government levy, which has effectively created a cash economy in Tanzania. And so if you go to Tanzania, they don't use M-Pesa like they use in Kenya. And those countries literally border each other. And so this is a perfect example how, if you have an instant payment settlement system that is centralized, its main business model, because they're not going to, oftentimes they don't provide access to savings or loans. Usually those services are paywalled for subscribers that have at least been subscribing for 6 months or have a certain amount in their account, which is typically too high for a person like a smallholder farmer to access. And so if the only value proposition for someone using those technologies is being able to remit within country, not even across borders, and that the main business model is going to be transaction fees from those individuals. And so this is a perfect example of how you can leverage at least scalable public chains, and not all of them are, to one, bring transparency as to what the transaction fees are going to be, but then two, get away from a system that quite literally makes its money off of those fees to sustain itself in the long run.
Can I jump in?
Go ahead, please.
Yeah, I mean, I don't think it's accurate to describe Web3 as feeless, right? I mean, there are fees that are hidden throughout the process, and there aren't really transparency. You don't necessarily know what you're paying in terms of gas fees, et cetera. So, I mean, I just want to make clear that it's not a comparison of no fees to fees. It's a comparison of different kinds of fees.
Yes, no, you're absolutely correct. But in the context of M-Pesa, 45 cents compared to Celo's transaction fees, which are about 1,000th of a cent, you're talking about a huge cost difference, one that quite literally makes the difference between people using them or not. In addition to government levy fees, which obviously can't be added on to blockchain fees, right? And that's a huge difference as well, as when you're using a centralized payment system, you can have government levies on top of the transaction fees that those companies provide. Now, obviously, this is barring future regulatory action, which would add government fees to blockchain fees as well, which is completely possible. But at least as those laws are ambiguous now and become more defined later, we'll come to see whether that will happen or not.
Yeah, I mean, because I think we need to compare it to what this would look like as an established payment service, which I think would definitely have government levies on top of it.
Or at least parameters. So sometimes levies can imply taxes, but sometimes it's more just to parameters. Stephen, I believe you were going to raise a comment earlier, and I want to give you a chance to chime in if your audio is still working. But in case you're still coming off of mute, I will pose a question to you in the interim. And the question gets back to this terminology of Web3. So it suggests this kind of tidy linear progression of internet eras. And again, we've been talking about this nexus of finance and tech. Maybe this is more of a financial innovation, as you've said on a blog post, as opposed to a technological innovation. But it's usually talked about in terms of Web 1.0, 2.0, now Web 3. Is it a logical successor, or is it a inevitable successor? And if not, what is?
Yeah, sorry about the video. I had a little technical problem here. I would fundamentally disagree with the kind of canonization of the web into different eras. And I'll echo what Hilary said about Web3. Web3 is basically a rebranding of the cryptocurrency sector. I don't think that it basically forms sort of logically coherent foundation for a new internet. I think it's basically a kind of way of presenting cryptocurrencies in a way that seems a bit more friendly to regulators in the United States and Europe. And I just fundamentally disagree with the entire conception that this is a new generation of the internet. And I think that opinion is echoed by most people in my field. Web3 has no precise definition. It has no precise meaning. It means whatever you want it to mean effectively.
Thanks. I would actually just briefly go back to an earlier comment that, or the exchange with Robbie and Hilary, some of the issues that, Robbie, you were alluding to in Kenya and some of the fees some of the firms have levied, the non-crypto firms have levied, reminds me of the continued importance and relevance that many have pointed out regarding competition, and in this case, competition in finance and allowing more non-bank providers to enter the market to challenge incumbents, or in the case of M-Pesa, which is a non-bank provider itself, to ensure that regulators are actually taking steps to protect against anti-competitive practices that take advantage of that market power once they secure it. But then also consumer protection. I think certainly people agree that people in the non-Web3 environment face the risk of fraud or scams or high fees and or poor disclosures, that sort of thing. And those issues continue to need to be addressed. So there's a question there of maybe that's worth doing, whether or not there is Web3. A couple audience questions that came in. One I would flag is, there's a question about to what degree these technologies are being developed, or the services using them are being developed with and for the communities in which they are being deployed. This kind of gets to a concept that we talk often about at USAID regarding responsible digital development, and not developing systems for people that are, sitting 1,000 miles away from the community, hoping that something is relevant or appropriate, but never actually really being sure. I'll let maybe Shailee take that.
Yeah, so I urge development practitioners to just start using the technology itself. Take a look at Project Good Dollar, which was, I think, initiated by eToro. So that is a DeFi protocol that provides like universal basic income to tokens, and majority of their users, actually all of their users, are in emerging markets. This started as an experiment, and they have like several 100,000 people taking one good dollar a day in the form of like a UBI, and the people, it's funded similar to like a social impact bond or an endowment. So the people putting money into this service are getting a little bit of a return, but and then what you're seeing is actually small marketplaces in Nigeria, India, the Philippines emerging and using these good dollars. And it's like, it's not that much money, but as those of you who have been working at in the development space for a while, you know that people with the least are really good at saving, and so it's interesting to see how these good dollars are saved in their digital wallets and they're being used for payment in small markets and things like that. So I would take a look at that. And I just want to echo Robbie's comments about, since I have the mic, about fees. I would say, not everything is Bitcoin and Ethereum. Look at Matic, look at Celo, Polygon, Celo, Stellar. There's a lot of really good work going on on networks with very, very little gas fees, and the wallets that are using these networks and tokens are doing KYC. So it's not like everything is happening underground. Like, these are regulated. There are businesses that are regulated in the United States and globally that are using these networks today for very low cost cross-border payments and national payments.
Thanks, Shailee. Actually, so I want to go back to Stephen for a follow-up on that. You mentioned that Bitcoin isn't the only cryptocurrency or crypto asset out there, or Ethereum. There's a long tail, many of which purport to do different things and or operate differently, have a different technological underpinning. For you, Stephen, do you view other or different types of manifestations of crypto assets differently based on some of those technological underpinning differences, or do you view them as all suffering from the same fatal flaws that you've talked about in some of your writings?
So you're absolutely right. There are kind of two major classes of crypto assets. You have the speculative investments. These are the Bitcoins, the Ethereums. These are manifestations of the greater fool theory. They're an investment in which the only purpose of it is to offload it on another fool. Then you have the stable coins, which basically act in some ways like money market mutual funds. They're basically pools of assets that people invest in that are pegged to some national currency. So stable coins are like a very strictly inferior form of like a bank deposit in some ways. And they're subject to the same kind of run risk that bank deposits are before we had deposit insurance back in the 1930s. And the largest ones are complete black boxes. And from a financial risk perspective, we have no idea what is sitting inside of these stablecoins. The largest one is a giant fraud whose founders are being hunted by the DOJ currently. So like, I don't foresee these kind of stablecoins as being kind of a way of bringing inclusion. They're a way to bring more financial risk to the global economy. And I'm very wary about using these things as the basis for economic transactions.
Thanks. And shifting from that over to you, Hilary, a question on safeguards. Stephen mentioned that's often an issue. As I mentioned earlier, most countries where we work do not all necessarily have regulatory capacity, supervisory frameworks to ensure that customers in those countries are able to use them safely and allow responsible innovation to occur in this space. Given that reality, and given the reality that people still face development challenges, still face issues like that, do you see a kind of a parallel tracking approach here where people can engage on the technology even as those safeguards are erected, or do you think that it should be much more sequential given some of the issues that you've observed on financial stability issues?
Yeah, I mean, to be clear, we don't seem to have the resources in the United States to take care of people, investing in these kind of products. So I'm very nervous about exporting them to the other parts of the world, and we're already seeing sort of disproportionate BIPOC uptake in the United States of these kind of products, and it to me smacks of the exploitative rhetoric around subprime mortgages. So, we're saying, okay, we're not going to do the hard political structural work that would allow you to partake in the regular financial system. Instead, we're just going to throw you this very risky product and let you sink or swim with it. And I am very concerned if we're exporting that mentality around the world. And yeah, I do think that we need a more precautionary approach to these kind of products, that they need to be regulated and verified and understand their risks before they're launched, not figure it out as we go along.
Thanks. We're nearing the end. So just to wrap up, I'll give each of you one sentence. What is the one sentence that you want people to come away from this session about your Web3 aspirations, your Web3 doubts, your realistic expectations, or all of the above? I'll start with Robbie. One sentence.
Community-oriented design and scalability is the only hope for Web3 adoption in under-resourced communities.
Great, thanks. That could either be taken as a warning or an affirmation, but it's good. Shailee?
I would say cryptocurrencies are borderless and the underlying blockchain protocols. And so it's important to have inclusive design and spread the growth via developers everywhere, globally contributing to the growth of these communities, and also protect privacy and provide security.
That was a remarkably impressive, grammatically correct sentence. Thanks. Professor Hilary, you're up.
Start with the problem and don't assume the blockchain is the answer.
Thanks. And lastly, Stephen.
Cryptocurrencies are high-risk assets that are strictly worse than almost every available solution and should almost never be the right solution to any problem.
Thank you. I think we've left the audience with some clear messages, and I want to thank you all. It was a wonderful panel. For folks that may want to follow up with any of the panelists, they should all be findable via Google, one of the large platforms out there. Stephen Diehl on his personal website has a lot of writing materials. Professor Hilary Allen, likewise on her American University page, and Consensus obviously has a lot of materials on their website, as does Robbie's company, Emerging Impact. So with that, I'll hand it back to the organizers and say thank you.